Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cashflow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real. Let me do that over again. That's funny. I've literally said that a million times. I don't think I've ever jumbled that one up. So let's start over again here.
I was kind of impressed. You had the radio voice going.
That's funny. That's funny. I've literally never jumbled that up. That's interesting. So 3, 2, 1. Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cashflow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. And our guest for this week's show is real estate investment expert, Crystal Caruthers. Now, Crystal is the co-founder of Chromis Capital, a value-add commercial investment group that specializes in industrial and retail assets. Crystal's expertise lies in finding off-market bargains, dealing directly with sellers, and crafting creative win-win deals. Now, her business has been carefully built around the desire to be fully present with her husband and children, all while lending the flexibility to travel as a family unit. And so with that, guys, it's an honor to welcome Crystal Caruthers to the show. Crystal, how you doing today?
I'm doing great. Thanks so much for having me, Kevin.
Yeah, excited to have you here. Excited to talk about your business. Pull back the curtain, as I always like to say, and just learn a little bit more about you, your background, and then ultimately, what your real estate business looks like today. So maybe I'll pass it back to you. Maybe take a few moments. I'll give you that brief introduction. There's probably a little bit more to it than that, your life story to that. So maybe tell us a little bit about your background. I know that you were, full-time W-2 employee for many, many years, I believe, as an engineer. And then at some point in time, introduced real estate into your world. And then at this point, it sounds like you are full-time. You guys are all in. And so maybe give us a little more of a background story if you could.
Sure. So I was always really good at science and math, and not surprisingly, people steered me toward engineering. And I loved engineering school. Turned out I did not love being an engineer so much. I was an electrical engineer, and I did that for a while. And then eventually I left that and joined my family's construction business, sort of pseudo engineering, but I never really loved it. Engineers really have a good engineer has a great attention to detail, and they have a very certain personality type. And I found that I didn't thrive in that environment. I love to be around people. I like to talk and network, and I'm kind of the big picture person. So when my son was born, I went to part-time. That was always really important to me, to be present in my children's lives. And we had done it that way intentionally. And then when our daughter was born a few years later, it was time for me to basically step back completely. But we definitely still wanted some income. Mm-hmm. And we had been flirting with the idea of real estate for years, but we had never found how to do it. What made sense. I think my husband had a spreadsheet. We were going to buy 25 houses in the next 25 years and probably never eat out again and pay all cash and never leverage anything. It was an awful plan. And we went on a ski trip when my daughter was really young. She wouldn't sleep. So I ended up laying in bed with her many hours every evening to keep her from crying. And I read so many books, and I stumbled onto one in the Kindle store for free about wholesaling houses. And that was a huge epiphany for me. It was answering every question that I ever had of how people manage to do real estate. So I devoured as many books as possible on that trip. And on the way home, it was a 10-hour drive, and my poor husband had to listen to me sell him on real estate all the way home. And, it was said and done. He's a banker, and he's a little bit more cynical than me. He only was willing to agree to go to the local RIA meeting with me. And I found out several years later that he only did that because he thought it was a scam, and he was going to keep me from buying something. But we did end up signing with a local mentor. So I guess he was right that we did buy something, but it certainly wasn't a scam. Mm-hmm. And that was 10 years ago. And now, we've done tons of different single family deals. And then a couple of years ago, we started transitioning into the commercial space. And I love to learn. And commercial is reminding me that I definitely don't know everything about real estate. I thought I had all the expertise I needed. And turns out there's way more of it out there than I had ever imagined.
Mm-hmm. Yeah, there's definitely some more complexities to a lot of commercial deals. Not all of them. Some of them are fairly straightforward and simple, but definitely on the average a commercial deal, I'd say way more complexities than that of just a single family home, especially when you compare it to maybe just wholesaling a single family home. And so,
Mhm.
no, that's great. I appreciate all the additional insights and the background. So let's talk about the the foundational period to to where you're at today, 10 years later. Yeah, obviously wholesaling is it's a very different business. I guess some could argue that it's real estate investing. It's more of a transactional business than anything else. I mean, you're basically finding bargains and then ultimately, marking them up, a certain amount and then flipping them to someone that's going to probably be the end buyer that's going to rehab it and then sell it to an end user, owner occupant. So you're really just doing a service for a fee. But you're not necessarily building a reoccurring income stream. That's a great way to get started because you can, I always tell folks you can stack a lot of cash. I mean, you can really,
Mhm.
I've known guys, I still do. I still know groups that have a very large wholesaling arm of their business. They do other things as well, but I've known folks that have done 3, 4. They on average they do 3, 4, 500 deals a year, which is just mind boggling. And so definitely a great way to to bring capital through the door, but definitely not a great way to create a sustainable reoccurring income stream that should allow for flexibility to go travel with your family, things like that, right? Like that's very challenging to do in the wholesaling world. So with all that being said, talk about some of those first deals. Obviously, I'm guessing that you probably started by wholesaling. And then what did the transitional phase look like? Kind of what was the next step after that?
Actually, we didn't. We actually were buy and hold investors
Oh, great.
almost from the beginning.
Okay.
That book on wholesaling really just opened my eyes that I could buy houses at a huge discount
Gotcha.
directly from the seller. That sort of
Okay.
creative market to the seller, work the deal in the front yard kind of transaction. So while we have wholesaled quite a bit through the years, it's almost just a supplement
Mm-hmm.
because sometimes you get a great deal and it just doesn't work for your portfolio, or sometimes you need some cash. So, I would say our wholesaling transactions are probably only maybe 5% of what we have historically done, but it is a nice tool in your toolbox.
Yeah, no, absolutely. I mean, it's literally exactly how I started. It was not the intent. My intent was to buy and hold because that's what my original mentor told me way back when. But what I realized very quickly is the $7,000 that I got started with when I put it into the first deal. I had a private lender come in and help me fund the deal. I used up every penny that I had to my name. Had a little bit of monthly cash flow after I got that unit renovated and rented, but it was going to take quite a long time before I had enough money, either by means of refinancing that house and doing a cash out, or by saving up enough money from the measly cash flow I was getting to buy the second house and buy the third house. So I realized my plan had to change fairly quickly, and that what it turned into was more wholesale 2 or 3 deals, keep one, wholesale 2 or 3 deals, keep one. I did that for many years until I got a little more established and was able to start cashing out on some of the older homes I had for a couple of years, doing cash out refis, things like that. But it's a great way to get started. It really is. There's absolutely nothing wrong with it, but it sounds like you guys still have that as a part of your business today, which is good. Again, whether the deal might not fit into your long-term portfolio or just the timing might not be right, but you've got a good deal that you've already negotiated.
Mhm.
Why not make something on it, right? Even if you're not going to take it down yourself, why not make something on it and pass it on to somebody else? So,
Right. And more capital makes everything better. So,
yeah,
um,
absolutely. Absolutely.
you can just do more deals with more capital if you can monetize everything that comes in as a lead, if possible.
Absolutely. And so, for many years, I know that you had mentioned before we start recording that you guys still have your single family portfolio. You intend to keep that portfolio, but you've at some point over the last couple of years have started opening your eyes up to the commercial world. So tell us a little bit about that. What really made you go exploring down that new path of commercial real estate? And I know that I believe that you're involved in some industrial deals as well as retail. So again, not just one, not just the typical commercial asset that a lot of folks go to, which is multifamily, right? Which is very similar to that of single family. But you've, again, just spread your wings a little bit further, even by going into the industrial world as well as the retail world. So tell me about that transition a little bit. What attracted you to that road?
Sure. So we knew we wanted to scale faster, but we don't really like to work with a large staff. Maybe one assistant at back then we were also property managing our own property. So we had our own management company. So we had a couple of employees there. But I found a deal that was 17 occupied houses. And yes, it was a little bit more challenging, to say the least, to get it bought. But we bought 17 houses for $965,000. A couple of them are real dogs. Most of them we still have. But while it was more stressful getting that done, when I finished, I was like, wow, I just accomplished a huge amount of our yearly goal in a 45-day period here. So we were even able to structure some creative financing on that. We used a bank loan, but we were able to negotiate for a seller carryback as a second to reduce how much we had to bring to the closing. I'd actually negotiated for the entire 20% to be held as a seller carryback, and my bank balked at that one a little bit, but it was a sweet deal.
Not surprised.
But it really opened my eyes to what could happen. I had never really looked into commercial listings or anything like that. And so after that, I stumbled into multifamily syndication as where, we should go next. I mean, let's face it, in the last few years, multifamily has been the really hot asset that everyone was speaking about. And it seemed like a natural progression for us from our residential background and single family houses. The only problem is everybody else in the world was looking to do that too. So we actually are members of a large mastermind. We've had a number of different training programs, because I firmly believe in being educated on everything you might want to do. It's well worth paying for some good education, or else you learn it the hard way, which also costs money. So when I joined that group, I went out looking for off-market multifamily, just like they were telling me to. But what I found was actually an off-market Class A retail center. So we sort of took that model, and we actually did syndicate that first deal. It's a 33,000 square foot shopping center in Moore, Oklahoma, which is just down the road from where I am. It's anchored by Sherwin-Williams, and we just thought it was a great deal. We moved on from there, and I kept looking for multifamily, but ultimately I'm a bargain shopper. I love to prospect for my own deals off market, not just those kind of off market ones that the brokers don't bother to actually post online, but real ones where I'm talking to the seller. And so we've just gone from there, and we did just buy our first industrial property with some partners a couple of months ago. And that one was actually a ridiculously good deal that we just got off an auction. That's the first time I've bought anything through an auction site, but we bought it off of 10X, which is owned by CoStar. And we bought a 90,000 square foot building for less than $6 a foot, because I don't think anyone else was even wanting it. So that one, it's not a complicated business plan. It's literally just find a tenant. It may take us a year or two, but buying it that cheap, we can afford to sit on it.
Yeah, no, that's great. Well, let's dissect both those deals. I think that they both are unique in nature. Let's start with the retail one. So was that, just get clarity here, was that a lead that you generated yourself by means of prospecting, or how'd you come across that opportunity?
That was one that a broker I knew sort of vaguely thought that this seller might be interested in selling, because he had worked with him before and he had alluded to he might want to sell some more assets. So that seller was not actively trying to sell it at the time, but that broker, knew he had some interest, and it was in no way distressed. It was a beautiful property, still is. It was only 8 years old, and we had Sherwin-Williams moving in right at the beginning of a 10-year lease. So there was really not much to do with that one. It was just that we were getting it slightly below market. So it was a beautiful, shiny asset. And, we had people interested in investing with us, and, it should just be nice, steady cash flow for our investors and for us. And we're not in a rush to sell it. We have either the plan that we can do a refinance at some point, and we do have it available where we could actually buy out our investors at market price. That was part of our initial offering. But at this point, we're locked in at 3.75% interest, and I have no interest in refinancing. And I think that we're all just going to sit back and enjoy the ride on a great facility.
Yeah. Did you, and obviously, a retail deal, typically it's really comes down to the strength of the leases, and whether or not you're dealing with, credit tenants or not. Talk to me about just, I guess, some of the learning curves of going through that deal. Obviously, you had to do some lease audits and just get a really firm understanding of each one of the respective leases. A lot of these leases are written in different manners. There's different nuances with each one. So how did you navigate some of those complexities? Did you bring, kind of an outside, advisor on board to help navigate those things, or did you just figure it out on your own as you went?
So there were 14 leases to review.
Mhm.
Most of them were the same, but the one from Sherwin-Williams, they used their own lease. And so that was already negotiated before we purchased it. So obviously we had to do a serious lease review of everything. We put everything in an abstract. And there were small differences even between the ones that were on a more familiar lease that the seller often used. There would be differences on whether, HVAC was covered by the landlord 100%. I don't think there were any that we covered at 100%, but there were some where the tenant was 100% responsible. And some of them we were responsible for major repairs over $1,000 or $1,500. And so
Mhm.
obviously that's something you have to go over with a fine tooth comb. In our case, some of our partners were actually attorneys. So we kind of banked on their expertise. I think going forward, I would definitely involve our property manager because they're willing to go through and work on that audit of all the leases. And now that we have an ongoing partnership with them, they could be a real asset in speeding things up. And so then I can just go through and check their work and maybe not have to be as thorough the very first time, and just leverage their ability because they're really good at reading leases. So I should
Yep.
use that.
And so did you buy that? Was that pre-COVID or during COVID or post-COVID? What
That
was the time
was
frame?
post-COVID. It was 2021,
Okay.
right at the end of 2021. So we snuck in there, got some great rates, and it had actually stayed really full during COVID, which kind of spoke to the strength of this. They had to fill a few of them, but all but one were full before we actually went under contract. There was a restaurant that had been in there as one of the anchors, and that's actually where the Sherwin-Williams was going in. So that actually worked out
Got it.
to our advantage because, Sherwin-Williams is obviously a corporate guaranteed,
Mm-hmm.
top tier tenant that, when you see the freestanding Sherwin-Williams, they sell at a really low cap rate.
Mm-hmm.
So I knew that was going to do nothing but elevate our shopping center.
Was that restaurant that went out? Was that a casualty of COVID?
That one was a casualty.
Yeah.
Yes.
Okay.
There
What
is
were
another restaurant that anchors the other end, but it actually was really strong, and it's amazing how busy it stays. The other one, I guess, just couldn't survive. It maybe wasn't as well established because this
Got it.
one has been in there from the moment it opened.
Okay, got it. That makes sense. No, I appreciate the insights in that deal. And how about the industrial deal? Like, this is even more intriguing, right? Now, buying your first property, not just first industrial property, but buying it on an auction site with it, which is creates a very, very compressed due diligence time frame, and just everything is just so accelerated. And if you don't know what you're doing, you can definitely find yourself in a precarious situation. So talk to me about, again, the opportunity. You guys were obviously, someone was scouring 10X and just keeping your eye on open listings or available auctions, and this one came across your desk. So what was intriguing about it initially, and then maybe give us some details of the deal. Kind of what's the business model look like? How long do you anticipate it's going to take to execute on that business plan, and what does the long-term projection look like? Like, after you actually stabilize the asset, what does it look like? We paid $1 million for it. It's going to be worth $5 million once we find that the right tenant to fill that place. So would love to learn more about it if you could.
Okay, so 10X is where we bought it, and
Mm-hmm.
they have all of the due diligence up there for you,
Mm-hmm.
which actually I really love because that's something that's been a bit of an adjustment, is the sheer amount of money you're going to spend on a deal only to back out of it due to inspections,
Sure.
doing environmental studies, all that kind of stuff. Like, you spend $10,000 very easily, and then all that may show you don't even want to buy it. So I can appreciate that all of that's already been done and is there for my review. So if it is already leased, it's already got leases up there. It's got the environmental study. It's got a PCA inspection. It's got everything theoretically you would need, but you are expected to have done your due diligence before you ever bid.
Mm-hmm.
So we originally were looking at a different property. We were trying to hustle and get something else bought before the end of the year due to tax reasons for us and our potential investors. And so this actually wasn't the one we were really shooting for. That one bid the day before. But when we didn't get that one, we're like, well, we did already walk this industrial property. We might as well put a bid in on that one. And it worked to our advantage too, because we had learned some things about the bidding process the day before, because 10X will totally bid against you. It's in the small print that it will bid up the price, possibly. And we started paying attention and decided that we could tell when they were bidding, because it didn't seem to happen until like time was almost out.
Uh-huh.
And then boom, it would jump up by the minimum amount and add 3 more minutes. And I'm not sure I would have realized that's what was really happening, except the day before the broker called me at a point that was 700,000 above where I stopped bidding. And he was like, hey, just come back in, you can get it. And I'm thinking, if there's 2 other people bidding way higher than what I've been willing to pay, why are you calling me? So it kind of tipped their hand that no one else was above me. They needed me to come back in. And we didn't on that one because the numbers just didn't make sense, but it gave us more knowledge for the next day. And so we actually were willing to go higher on this one, but we saw the same pattern. And so we made the choice to stop bidding. And sure enough, afterwards, they called us and said, hey, would you take it for your top bid? And I said, sure. And at that point, the reserve wasn't met, but we got it for what we, below what we would have paid.
Yeah.
And so on that one, it's a little crazy. It's about 89,000 square feet, and we ended up paying 510,000. And it was for a building built in the late 80s, wasn't in bad shape at all. And it just is in a place where there's not as many people shopping for it.
What was the prior use? What was the prior use? Who's the tenant there?
It had been a manufacturer of patio furniture. So they had, actually, we still have it in there, some powder coating ovens and paint booths. And so that was one concern, because I've never bought anything where they did a lot of powder coating. So I didn't know what kind of environmental concerns there were. There was a phase 1 study done, but I was still nervous. So when we had toured the facility, the seller had mentioned that he had done a phase 1 when he had bought it a few years earlier. So I reached out to the broker and was able to get a copy of that one too. So I felt more comfortable taking this on, since I had 2 different independent studies saying that, environmentally it shouldn't be a problem. And then honestly, the purchase price was just so low, it didn't feel like that big of a risk. We basically underwrote it that, it may take us 2 years to fill this thing, which we are open to leasing it to a single tenant or dividing it. If we lease it to a single tenant at about half of what the market rent is, we will be able to sell for more than 3 times what we bought it for.
Okay.
So, and that's if, like, by the end of year 2, we can get at least at that. If we subdivide it, we'll make a lot more, but it'll be more effort.
Are there any conversion opportunities? I mean, converting it to some other type of use, or no? Self-storage. What comes to mind? Self-storage. I don't know where it's located. It doesn't sound like it's probably on like a major thoroughfare or anything.
No, it's in McAllister, Oklahoma, which is a smaller town on the southeastern side of Oklahoma, but it is on a highway that goes from Dallas to Tulsa that sees a lot of traffic. So trucking is probably one of the main possible tenants. We are open to converting it to self-storage, but I'm not sure there's a big enough demand in that area to do that conversion. I think the most likely scenario is that we will rent it out, 10,000 feet here, 15,000 feet here. And if we do that, we'll be able to get, closer to market rent, which could make it really a much more lucrative thing. We did partner with some people. And so we've got enough money just sitting in the coffers, either to sit on it for a couple of years without worrying about our holding expenses, or to use that for tenant improvements and conversion, if we need to throw up some walls and split it into multiple pieces. And then if we end up breaking it into 5 or 7 individual spaces, we probably would actually keep it long term. We're nervous about keeping a single tenant, huge building in a smaller area for long-term cash flow, even though that is our usual mode that we want to follow. In this case, though, if we had multiple tenants where we didn't have to fear the risk of vacancy as much, we'd probably just pull cash back out and move on to the next one and keep that just cash flowing nicely in the background.
Yeah, no, absolutely. That makes sense. I mean, diversifying your risk across multiple tenants seems to be much more palatable than just that one gigantic tenant. Unless I guess there's certain scenarios where maybe it's like a national credit tenant, which probably wouldn't be the case given that it's in such a small town, but you just never know. I guess what has the general feedback or sentiment from the local industrial brokers that you've spoken with, or maybe there's one you're working with, what have they said as far as like the overall demand for that facility, whether it be just for a single tenant or breaking it down to individual units?
We have gotten good feedback, especially from the local economic development person with the city, as well as for the Choctaw tribe. They have their own economic development person, and that's a very powerful economic force down in that part of Oklahoma. So I know they're already getting inquiries, which is pretty exciting. The brokers feel like as long as we're flexible on our price, that it shouldn't be too hard to lease it. The feedback we've gotten from the locals is that the seller was really hung up on getting a full market rent. And that doesn't really make sense when he was willing to sell it so cheap. And market rent there is $3 to $4 a foot. If we can rent it for $1.50 to $2 a foot, it's going to be a huge home run for us. So we don't need to hold out to get the very highest top dollar. There's a lot to be said for velocity of money. Absolutely. So if we can, rent it for half the price and triple our money, we're just going to take that and go to the next one, because we always buy at a discount anyway. So the sooner we can do it again, the sooner we can make more money.
Yeah, fantastic. I'm given that deal right there. I'm assuming that you're spending a good bit of time on 10X, just paying attention to the different auctions.
I am. So that's my new favorite buying strategy, is looking for these vacant properties that maybe no one else is real interested in. But I had always had the thought that I needed to get a $5 or $10 million deal really to make it worth our time and to have enough profit in it. And this one has kind of broken down those barriers in my mind, because I'm going to make it a lot of money on this one without really that much risk, relatively speaking. I would much rather sign a loan for $400,000 than for $10 million. There's a lot less pressure on me to, immediately find a tenant or whatever when the holding costs are so low.
Sure. No, absolutely. It's switching gears here, Crystal, if we could, I would love to maybe hit on before we wrap it up here for the day. I know that we talked about this before we started recording, but you've since gotten your kids. Is it 9 and 14? Is that accurate, or am I incorrect with the ages?
Close. They're 10 and 14.
10 and 14. They're both involved in the business, and it sounds like they even each own their own rental property. So tell me a little bit more about that, and just maybe some strategy for those parents that might be listening in here that would love to get their kids more involved in the family business.
Yeah, so that is probably the thing that gets me the most excited, is being able to share my financial knowledge with my kids now. And from a very young age, we always played Cashflow with them. There's a Cashflow for Kids version that it has simpler math, but now we just use the little app on the phone that does a lot of the math for you, and we use the grown-up version of the Cashflow game. And so from early on, our kids know what a doodad is that they're wasting their money on, or which one is a great deal, why you're not putting your money just in the CD, all those aspects of the game. So, back maybe 5-6 years ago, I was a lot more hands-on with our leasing, and, I often had to drag the kids around with me. That was, good times back when they were really young and not even in school. And we were out looking at disgusting houses and trying to rent things. So they've seen it from the very beginning. I mean, if anything, they were very involved from the beginning. And at some point, I think my son was maybe 9 or 10 at the time. And he said, well, can I get a house? I was like, yes. And then he asked, do I have to stop with just one? I was like, no. So we will get you as many as you want. So at that point, I started looking for the right deal, but they had both saved up money. And for years, how we bought our houses was we would use a private lender to fund the entire purchase and rehab, and then just immediately refinance it out using the Burr method. But, with that initial private lender. And so a couple of our private lenders knew my kids, and they were happy to offer them the same opportunity. So when we found the right deal that didn't need a huge amount of rehab and would cash flow almost immediately, then we were able to move forward. Which I actually looked for a couple of years before I found the right one. But our son bought his first one when he was 12 and he had saved up $3,000. And so we actually, he has his own LLC. I'm the acting manager on it until he's of age, but it really is his money because he put in that money for the emergency fund. The whole purchase and rehab was funded by the private lender. And as long as we were willing to guarantee it, the bank actually was willing to refinance that out with a bank loan to his LLC. So, and at that point, I think he was all in for about $57,000 when we refied it, and it appraised at 83. So, just that day I was able to say, Oakley, you've already made $26,000. And, his eyes got really big, and they've been cash flowing since day one. And finally, last year, I had an opportunity, had a package of houses come in through my website, 16 occupied houses, and a couple of those would work for them. So my daughter got her first one because by then she had saved up $3,000 for her emergency fund. Our son got the second one. And, my dream is that by the time they would get out of college, they would have this passive income for their whole life. Even if they don't end up loving real estate or wanting to do that, time is on their side. Mm-hmm. And so, what I wouldn't have given for a steady $3,000 a month, who knows what I would have done?
Rich back
you might go be a rock star or a artist or a marine biologist, all those things that, kids say they want to do, but they don't do it because at some point the light comes on and they realize they have to make money. Well, if you had that passive income, and they will know how to invest it properly, there's no telling what they might do. And they've been very involved, even like in the rehabs. They were involved with, the scope of work with the contractors. And my son even comes in every month and has to do his own QuickBooks entries. We haven't started that with the 10-year-old yet, but, we want him to understand the backside of it too.
Yeah, that's great. I love it. I love every bit of it. That's fantastic. Well, I appreciate you sharing that. And Crystal, for those that want to learn more about you and just the different things that you have going on, is there a place they can find you, a website, social links, anything that you'd like to share?
I'm on Facebook, Crystal Tyler Caruthers. That's one of my better places to reach me, through Messenger on there. Or my email is crystal@Chromis, CHROMIS capital.com. And I love to just chat with people or find potential partners or just, talk about what a wonderful thing real estate is. So people are welcome to hit me up.
All righty. Well, fantastic. Well, again, Crystal, thanks for joining us here today. It's been a lot of fun having you, and appreciate you, sharing insights of your business and just, the family aspects of it all. It was a great conversation. So thank you again.
Thank you, Kevin. I really enjoyed it.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.